Hey everyone, it's Evan here from the Trade Risk on Thursday, September 28th. We're intraday right now. It's about 1:30, 2 p.m. Eastern time at the time of recording this. And in this video, we're going to be reviewing some individual stocks. These are stocks from a subscriber question plus some names that you guys asked for on StockTwits and Twitter. So we get 6 names we're going to run through throughout this video. We're not going to talk about anything on market related. We did our midweek video yesterday, so if you watch the last video on our YouTube channel or go to the traderrisk.com homepage, you'll see our midweek recap, covers everything on the market environment, and basically nothing has changed today from when we recorded that just last night, so you can have a listen to there. And if you're not following us on our YouTube channel or social media, do so if you do like these updates. And with that, let's get into it. So the first name we're looking at today is GIII Apparel, so ticker GII. So we're going to start with the weekly chart first here. We're going to look at this, and you can see it's been in a pretty severe downtrend since 2015, but notice we are starting to turn the tables here. We've got some high volume coming in on some of these bottoming candles and some of these moves off of the lows. So we do have sort of a break of this downtrend line. And if we zoom in a little bit further, you can see this was the real sort of igniting week. 30% rise to the upside on some significant volume back in June of this year. And then since then, that has basically stabilized price, and we have trended higher. Now, I do like that. I think this candle here, this was back just last month in August. I think this was a pretty significant candle here. So if we zoom back and just take a look at the sort of psychology or the landscape on this session, on this week here, on the 18th, closing day of the 18th, you can see basically, you know, this still looks pretty bad here. Been in mostly a downtrend. Yes, we had this nice kind of move off of these lows on high volume, but right here kind of signaled, well, maybe we're in fact kind of double topping and ready to kind of come back down and retest these $20 lows. But you can see the very next week we completely reversed that, 13% higher volume. And I think that was a pretty important candle now, or week. So when we look at where we currently are, the way I would sort of view this at this point is this is the very key area right in here. These were the highs from February, March. You almost rallied to them in June. You kind of failed right here in August and then recovered them back later that month. So to me, this 2750 to 27 area, that's pretty important, and I'd want to see this really stay above that general area. You can see the 8 and 20 period moving average, just the fast moving averages here on the weekly chart have been curled up. And if we go down to the daily chart to get a little more actionable here, you can see we did just kind of wash out, make a nice little retest or low down here near this significant area last week around 2760. So I think, yes, that is a key area to sort of hold on to. And I think as long as we're above here, I think we can try and stay patient and look for potentially a retest of this level. I would say this would be the first target or area that I would be lightening up, or at least observing very closely, is right around this 3250 area. This is pretty emotional trading right in here, and I got to imagine that there's some trapped traders ready to unload if we can get back up there. So that would be sort of my first target. If we can break through there with some authority, this should be some pretty slim trading right in here, because this is basically just a big open gap. So if we can get, you know, through that 3260 area, get a couple of closes below there, I do think we can very quickly sort of get in here and maybe fill this gap. But I would say that, you know, this is going to be the hurdle to really sort of figure. So I think the levels are pretty clear, 2725 on the downside, and for a potential target of 3260. If you want to get real tactical, it'd be first target of right here around 3050. But lots of ways to look at it. But in general, I like the formation. The trend is starting to curl back up, so stick with it. So that's the first one. Next, APTO. So APTO's name I'm not familiar with, but it's a very small biotech company, $36 million market cap here. So I don't know if there's some other read beyond just the technicals here. I mean, when I look at this from a technical picture, it is not inspiring really at all. And particularly with biotech now and some of these smaller biotech names, there's a lot that are looking pretty good right now. And this would not be it from a technical picture. Now, again, if there's some other backdrop here, fundamentals, that is something we obviously can't, or I don't cover, excuse me, in this video. So What I can say with the technicals, though, is, you know, we do see some volume kind of upticking here over the past several months. So maybe there is some life coming into APTO. We are above the 20-period rising moving average, starting to fall back below that 8-period. So for me, if I had to be in this trade, then I would be, you know, really looking for this to hold above this 135 area. These lows from September, I mean, this just seems like a pretty obvious spot. If we start to roll over here, that really just does not bode well for this one. If we go down to the daily chart here, you can see it's basically just consolidating. You could probably get some tactical support buys more or less around here, accumulate at the bottom end of this range, so long as we're above $1.30, and then maybe sell the upper end of the range here until we get that breakout. So very classic sort of just range bound behavior in here. Above 135, holding this bottom zone, you could cheat it down to 133. You'd want to see it just hold this general area, accumulate down here, sell up here, wait for that breakout. So that's all I'd have to say about APTO. Not my favorite out there though at this time. GDX, so gold miners, sort of interesting. I liked gold miners basically coming off of September here, looking at this nice strong rally throughout August, and I was waiting for that pullback to come, and I was getting sort of excited about the pullback as a potential buyable opportunity. It's kind of pulled back a little bit more than I thought. I think this 23 is just psychologically for me, it's kind of an important area. I just don't want to see it retrace anymore. If we start to lose below $23, it just, to me, that's a pretty harsh pullback there, and I would you know, I wouldn't be as excited about it. If we look at that weekly chart, you can see the 20-period moving average is really flattening out, and it's right here. So I want to see us hold in here. You can see the volume on this pullback is kind of light, although you could argue the rally up was kind of light as well. But more or less $23, and it is holding it, right? We had an ugly session yesterday, and we are recovering off of that today. We're not getting follow-through. So I do like the potential here for gold miners. And the way I sort of played this, because again, I was looking at this area, this sector of the market to sort of look for a trade opportunity, is I played it via NEM. So Newmont Mining here is basically just a more or a better sort of relative strength play on the mining space, and this is how we played it, and we're currently involved in this position. This is a trade that we're in right now, and we're underwater in the trade. I believe we got involved right here on the 19th. So it is holding this $37 support, but if I look here on the weekly chart, take a look here, we're above a rising 8 and 20 period moving average. We're trying to hold above this significant level of around 37.25, retesting it right now on some lighter volume. So I like this play. Like some of the individual miners I probably like more than the GDX itself. But same kind of concept applies here. We're barely holding on to this support. I'd like to see this kind of lift out. And again, I just like NEM versus GDX. But that's sort of the thoughts there on sort of both. So next, PayPal. Now, PayPal, I haven't looked at PayPal in quite a while. Last sort of significant breakout was back here in July of this year. And ever since breaking out kind of this gap and go, we have been in this new sort of trending phase. And it's a very sort of you know, 2 steps forward, kind of 1 step back type of thing, where it's just a grind higher. But the grind is certainly paying off if you've been patient in here. If I look at that weekly chart, you can see here just super steady, and it is just on the acceleration, on the move higher. There's really not a whole lot else to say about it. The volume pattern, there's not too much to speak of. We did have, you know, a bit of a higher volume day here on the 25th. Maybe that's interesting, kind of a thrust off of those highs. So that's something you could maybe key off of, but really this trend is just still in place. So there's not too much to do or say about it until it starts to lose this 20 period or maybe this trend line here. But until it starts to really start to deviate a bit more, it's kind of business as usual, and for all we know, this thing could trend higher another 10 points to the upside before a significant retracement. But if we start losing this trend line, if we start losing the 20 period, then we have a bit of a change of character. So nothing compelling enough to really enter this trade, nothing to exit the trade. I don't know if you're in it or not, but PayPal kind of just chugging along. So that's really all I have to say there. Next is Costco. So Costco had, like many of these defensive big staple names, had a rough June or July. Maybe Costco a little more accelerated in that with the whole Amazon scare and everything else that's going on. But all that news and fun aside, if we just look here at the technical picture, I think this channel, broadly speaking, kind of speaks to the general movement here in Costco. You can see we're just getting some big waves up and down here over the past several years. We're making these, 30-point advances, and then we're pulling back and retracing, nearly all of it, and we're very slowly kind of wave formation, stair-stepping higher. So for me, this 150 area, that kind of continues to just hold in this pattern here, and you can see we're pushing off of it now. If we go down to the daily chart, we get some more immediate structure we can sort of look at. If you were looking at this on the daily chart, then this is a very important area, this 160. This was the highs here from June, or not the highs from June, but where we sort of rallied to after getting decapitated down here. We failed. We kind of rallied back up here in August. We failed, and we finally broke through it. So I'd say 160 is a pretty critical area, and as long as we can stay above there, the short-term trend is higher, and perhaps we will grind this out over many months back up to the upper end of this range and perhaps fill this gap. So a little bit slower of a mover there, but I think the the merit is, we had this nice washout, came to the bottom end of this channel, and now we're starting to pick ourselves up and move back to the upside. So that's Costco. Finally, we get Apollo Management, APO. So APO, kind of another slower mover here. It's had a pretty fantastic 2017, rallying all the way from 17 to the teens, all the way up to 30, so nearly a double, and coming back into some prior supply here from 2014. It's a real steady mover. It's kind of the same comments to PayPal. It's just grinding itself out, and I don't really have a whole lot more to say about it. I think this one, Apollo, is probably a little more interesting because we are kind of sharply rejected this $30.50 level. And the reason that's important is because that was a price top here, pivot high back in early August. So you can see we had that pivot high, we pulled back, we consolidated, very healthy. We had this move up, broke out to new highs here, and then quickly reversed, and we're back below this pivot. So for me, that's always kind of let's take a step back and reevaluate, wait for us to reclaim $30.50, this prior pivot. That's generally how I would approach it if I am super interested in a particular name. So that's probably what I'd be doing from a momentum standpoint. I mean, from a pullback standpoint, dip buying here, I think it's reasonable. We're coming back into the 20 period. We got good structure. The trend is in our favor. So again, nothing extraordinarily sticking out here in APO. It's just holding this very long-term trend. And volume, again, aside from this reversal here, which could materialize to something significant if we start to see more follow through to the downside, break of this trend line, this reversal here could have sparked it all, but we have no way of knowing that in real time. So for me, I'd like to generally just see us get back above it and get in the trade or execute accordingly. So that is the 6 that we had to cover. Hopefully this has been helpful. Thanks for submitting those tickers. And that's it. That's all I have to say. So thanks for watching, and hope to talk to you guys again soon.